Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, September 3rd. We got a few economic news releases scheduled for today. Here's our prelude for the jobs numbers tomorrow. We got the weekly jobless claims today. So we had last week 270,000 people applying for unemployment. It was supposed to increase to 275 and actually exceeded at 282. So economically, obviously that's not the greatest news, but it's still jobs aren't that bad right now. So the job market is a decent market out there still. Trade deficit for the month of July is not just kind of a minor report, but definitely interesting to see where we stand with with our global competition here. So we had 45.2 billion in deficit back in June, and the forecast was supposed to drop down to 41.8, and we came pretty much in line with that at 41.9 billion deficit. And a lot of that, of course, is attributed to the stronger dollar. ISM non-manufacturing, also known as the service industry. So still a strong number in here. We had a 60.3 back in July, and the forecast was actually supposed to drop down to 58. Came down to 59. So still a strong overall number in the services industry, as we're anything above 50 is considered expansion here. So not bad numbers right there. Stock market's up. Dow's up over 100 again today. A lot of it is the data we had today, but also some comments by the European Central Bank's Chairman Draghi. He made some dovish remarks, basically stating, they kept the interest rates the same, as well as came in and basically stated that they could start buying some of their assets, as the Fed had done. We had done and stopped our purchases about a year ago, where they had their own type of quantitative easing over there. Also, something that will help sell the markets next 2 days after last couple of weeks is the Chinese markets are closed for their holiday, which is a World War II celebration parade, victory parade. So they'll be closed for the next 2 days. So we'll at least have hopefully some stability in the markets these next 2 days. And then, of course, here in the U.S., we'll be going into a long weekend with Labor Day weekend coming up here. Bond market is after kind of down this morning. It was down this morning and kind of rebounded. So rates are a little bit better. We're up about 9 basis points from where we left off yesterday. So good sign. Still above the 25-day moving average, and still in that we're heading into that crossroads between the 200-day moving average and the 25-day moving average, which you can see with the blue line and the green line going upwards. So we'll at least at some point have a point where we'll have to go one way or the other. All right, folks, so we're starting to get this sideways pattern here. As you can kind of see, it's going to get a little bit more volatile, especially tomorrow with the jobs numbers, as we had indicated. It may be a good time to kind of lock in, to kind of protect where we've been, especially some of the drops. But again, it's going to depend on the jobs numbers coming in tomorrow. My feeling, personally, the markets, if job numbers come in strong, the stock market will go in the opposite direction, and bond markets will kind of rebound. We'll come back, we'll go up, and we'll have better rates. But if we have a weak jobs numbers, my feeling is that the stock market might rally, and that's only because good news is bad news and bad news is good news, because they're worried about the Fed's meeting next week, or actually about 2 weeks, on the 16th, when they may possibly raise interest rates. By having bad jobs numbers, maybe they might hold off on raising interest rates. All right, so you guys have a wonderful day. We'll see you guys tomorrow, and thanks for watching. Take care.